back, by the way, with Tom Brown. He's the CEO of Second Curve Capital, a hedge fund, and specializes in talking about financial stocks and financial companies. And Tom, so we've established that you absolutely do not like this pick as Brian Moynihan as the CEO of Bank of America. But in the time that we have, though, I want to move on to the other big banking story we have out, which is Citigroup. The Treasury delaying their sale or a portion of their sale on the shares that they have in the bank. I mean, your thoughts on that?
Well, yesterday must have been bad corporate governance day. So Citigroup comes out and rushes a massive common stock offering. Even the Treasury Department is smart enough to figure out that they shouldn't be selling their shares at this price.
Right, they're going to sell it at a loss. Yeah.
Right. So we have the CEO of Citigroup that says, that's fine, I'll sell shares, I'll dilute shareholders at this price. But the Treasury's smart enough to say, no, we're not going to do it.
Yeah, but the Treasury approved this, right? I mean, they said, okay, Citigroup, you're strong enough to do this, so we're going to allow you to do it.
The Treasury doesn't care about dilution to existing shareholders. The CEO of Citigroup should. And this is another example of where we've got the wrong guy in the wrong spot.
Okay, so you're talking about Pandit, obviously. What is he going to do from here?
Well, now he's got capital. And so I expect him to take more losses, get rid of more assets, continue to downsize the company at the expense of current shareholders. I think it's a real disappointment. I'm glad I'm not a shareholder of Citigroup.
Okay, so and short of that, then, I mean, who is, because there's going to be talk, obviously, if Pandit can't get this back on track, there's going to be talk about who is going to be able to lead Citigroup back on track then. I mean, who is out there then?
Well, we've got the candidate that I mentioned for B of A is on the board of directors of Citigroup, Mike O'Neill. We also have Bob Kelly. I think he would have been a great choice to be the CEO of Bank of America. He'd be another great choice to be the CEO of Citigroup.
Okay. All right, Tom. I want to move on, though, and talk about the government because, you're giving a little bit of a pass to Treasury in terms of, hey, they're pretty smart. They know not to sell, not to sell Citigroup at a loss. But overall, though, you've been pretty critical about how Obama and the administration have handled the banking industry. And I want to just take a quote from one of your recent columns, and you say, quote, "I will say flat out that Obama's approach to dealing with bankers and the banking industry has been brainless." Brainless, Tom.
Brainless. You can't ask the banking industry to be lending a lot more money on one hand. They got to do more to help us. And then on the other hand, raise the capital standards in a stealth way to be more than twice what they are for the rest of the world's banks. You got 2 feet on the accelerator, you got 2 feet on the brakes. That makes no sense to me.
But hang on, because I can imagine, and this was alluded to a little bit as well, these banks, Goldman Sachs, JP Morgan, they're making a lot of money on the trading front. And they're making that money, they're giving it to their bankers. Compensation's not really going down as much as we thought. So why not funnel that money into lending? That's apparently their view.
Well, there's the banks would love to lend more money. In fact, the easiest way to think about this is lines of credit. So banks give out lines of credit to corporations. The usage of those lines of credit is at an all-time low. That tells you that corporations don't want to borrow. It's not the banking industry's inability to lend or lack of desire to lend. It's that borrowers are trying to go through a period of deleveraging.
Okay. All right, Tom. Good to talk with you as always. Tom Brown, the CEO of Second Curve Capital.